I did it. I bought my home. It's the one you see in all of my videos. And while everyone was congratulating me, I secretly ran the numbers and I realized I might have made a huge mistake. Hi, I'm Emily, your big sister in finance and a financially free mom of two. On this channel, we make personal finance clear, relatable, and actually useful while we figure out life and money together. If that's your vibe, then hit subscribe, and I'm going to be pulling back the curtain, showing you the math behind house buying that nobody talks about, and reveal why I'd actually be richer today if I just stuck with the stock market. You might want to sit down for this one, so grab your cup of tea. And spoiler alert, I don't actually regret my decision. For my entire adult life, one phrase was really drilled into my head: renting is just throwing money away. I mean, you've heard that too, right? It's practically a national motto. Buying a house is sold to us as the cornerstone of the American dream, the ultimate signal that you have finally made it. It's supposed to mean stability, a place to put down roots, and a guaranteed path to building generational wealth. And I completely bought into it. Every month that I would send that rent check, I'd feel this little pang of guilt, like I was just setting a pile of cash on fire. My landlord was getting rich off me, I was paying his mortgage, and I was building zero equity. So I did what you were supposed to do. I saved like a maniac for about a decade, and I finally had enough to put a down payment on a modest $500,000 home with my husband. The day we got the keys was pretty surreal. Just walking through all the empty rooms, smelling that new paint smell. It was this incredible sense of accomplishment that we had done it. We were homeowners. We could see our future here. There were no more rent payments. But then the bills started rolling in and the real estate market was tanking. We happened to buy at the top of the market. And once we thought was once an amazing investment was losing value every month that went by. So I did what I always do. I opened up a spreadsheet. I just wanted to really quantify this so-called amazing investment that I had made. And that's when that sinking feeling really began. That dream I was sold started to unravel, and the numbers on my screen were telling a completely different story. All right, so let's get into the math that they don't show you at the open house. We're gonna be comparing two scenarios over 10 years. In scenario A, I buy the $500,000 home. In scenario B, I keep renting and invest the difference. First, the down payment. I put down 20%, which is $100,000. That is money straight out of my pocket, right from the start. My mortgage on the remaining $400,000 was at a 6% interest rate over 30 years, which works out to be about $2,400 a month for principal and interest. But that's not the real cost. Now we add in the phantom costs, the stuff that everyone just conveniently forgets about. First off, property taxes. The national average is about 1.1%. So on a $500,000 home, that's $5,500 a year or an extra $458 a month. Then homeowner's insurance. So this will vary, but a typical policy for a place of our size is about $2,400 a year. That's another $200 a month. Maintenance and repairs. The classic rule of thumb is to budget about 1% of your home's value every year for upkeep. So for a $500,000 home, that's $5,000 a year or about $417 a month. This covers everything from a new water heater to servicing the HVAC to fixing a leaky roof. So the real monthly cost of owning this house isn't $2,400. It is $3,475 per month. Now, what if instead of buying, I rent a comparable house right down the street? A quick search shows that I could get a similar place for around $2,500 a month. So in this timeline, I take that $100,000 I would have used for a down payment and invest it straight into a simple S&P 500 index fund. The historical average return for the S&P 500 is about 10% a year. It's the standard benchmark for a reason. But it gets better because my monthly housing cost is now just $2,500 a month instead of the almost $3,500 I was paying as a homeowner. That's an almost extra $1,000 in my pocket every single month. And what do I do with that cash? I invest it. Every month for 10 years, another $975 goes into that same S&P 500 fund. So after a decade, who comes out on top? In scenario A, so the homeowner, let's look at my equity. Historically, US housing appreciates at about 5.5% per year. And I know some recent years have been insane, but let's just use the long-term average for a realistic projection. After 10 years, my $500,000 home would be worth about $854,000. My mortgage balance would be paid down to around $332,000. So my total equity is $854,000 minus the $332,000 I still owe, which equals $522,000. Now for scenario B, so the renter investor. My initial $100,000 growing at 10% annually for 10 years turns into approximately $259,000. My monthly investment of $975,000, also growing at 10% over 10 years with continuous compounding, becomes about $200,000. Add those two together and my investment portfolio is worth $459,000. Wait a second, $522,000 in home equity versus $459,000 in stocks. That looks like the house won by a landslide, right? Wrong. We forgot the most important and probably the most painful part. To actually get that $522,000, I have to sell the house. Selling a house costs a fortune, typically around 6% for realtor commissions, plus another 2% in closing costs. On an $854,000 home, that 8% fee is a jaw-dropping $68,000. So my net equity is $522,000 minus that $68,000. And that leaves me with $454,000. So let that sink in. My net position from buying the house is $454,000. My net position from renting and investing is $459,000. I mean, it is close, but the renter is still richer. And the stock portfolio is completely liquid. I can access that cash tomorrow with just a few clicks. The house could take months to sell. And this is also after 10 years. When buying a home, you have to think very long term to even make just a little bit of money. Otherwise, those realtor costs and mortgage are just not worth it. Oftentimes when people are buying a home, especially a starter home, they're only planning on living there for 3 to 5 years. People want to upsize or move cities or go to a better school district. But to get into the real estate game, you have to be thinking 10 years out at least. With a mortgage, your interest payments are front loaded. That means those early payments will be more interest payments than actual principal, and you're gaining less home equity. That's why it's super important to think long term when buying a house. Look, if this breakdown is giving you a new perspective, do me a favor and hit that like button. It's a really small thing, it costs you nothing, and it really helps the channel and tells me you want more of this honest financial analysis just like this. So looking at these numbers, you have to ask yourself, how is the narrative so different from the reality? And it's because what we're told about real estate is built on a few powerful boomer myths. First is the one you hear from every real estate guru, that 90% of millionaires made their fortune in real estate. And that's just not true. Study after study shows that the vast majority of millionaires built their wealth through careers, owning a business, and consistent investing in their retirement accounts. Real estate is often a part of their portfolio, but it's almost never the main engine. The second myth, real estate is passive income. Anyone who's ever been a landlord is laughing right now. It's not a part-time job that you can just clock out of. Screening tenants, fixing toilets at 2 a.m., chasing rent, it is the opposite of passive. Even owning your own home is a constant stream of active maintenance and bills, just like my spreadsheet proved and just like I'm living today. And the biggest myth of all is that real estate provides unbeatable returns. Yes, leverage can definitely amplify gains, but it also amplifies risk and cost. So when you factor in everything, the maintenance, taxes, insurance, transaction fees, and the fact that it's not a liquid nor passive asset, the net returns for most people just don't beat the stock market over the long run. We've been taught to see our homes as number one investment when really it's our number one lifestyle expense, and a very, very expensive one. So am I telling you to never buy a house? Am I putting my home on the market tomorrow and going back into the rental market? No, absolutely not. And this is the most important point of the whole video. On paper, I would have been richer as a renter. That math is undeniable. But here's the thing. Wealth isn't just the number in your brokerage account. It's about the richness of your life. And while my house may be slightly inferior financial investment, it is an incredible lifestyle investment, and it is aligned with my goals and dreams and my husband's goals and dreams for our family. There's a value here that you just can't put on a spreadsheet. It's the stability of knowing that my kids can grow up in the same neighborhood and go to the same schools. It's the freedom to paint a wall a ridiculous color without begging a landlord for permission. And it's the joy of having a barbecue in my own backyard and watching my family build a life here. And you can't live inside of a stock certificate. Again, renting is not inferior to your dreams and goals, but this was my personal goal. My family is here to create memories, and it's not an asset I'm trying to flip in 5 years for a quick profit. The financial cost of this decision, a few $1,000s difference on paper, is a price that I am more than willing to pay for these incredible benefits. And realizing that home ownership is a lifestyle choice first and an investment second is incredibly freeing. It takes away all that pressure to time the market or feel bad if its value doesn't beat the S&P 500. But let's be honest, renting has its own undeniable magic, and it's not a consolation prize by any means. Renting is freedom in the purest form. It's the flexibility to pack up and chase a new job in a new city without being chained to a mortgage or waiting months for your house to sell. And it's never having to spend Saturday fixing a leaky roof, replacing a broken water heater, or writing a 5-figure check for a surprise repair, because that's the landlord problem, not yours. And if you're young, single, or in a relationship that hasn't quite found its footing yet, renting is almost certainly the smarter play. Tying yourself to a house with someone before you're sure is a financial and emotional landmine. Renting lets you keep your options open, your life flexible, and your weekends free. That kind of freedom has real value too, maybe even one that beats any spreadsheet. So, what's the bottom line? Anyone who tells you there's one right answer for everyone is probably trying to sell you something. From a purely mathematical spreadsheet warrior perspective, the evidence suggests that disciplined investing in the stock market will likely leave you with a larger, more liquid net worth over the long term. The hidden costs of home ownership are very real and add up fast. But we aren't robots just trying to optimize a number. We're humans who value community, stability, and a sense of place. So my journey taught me that the key is really being honest about why you're buying a house. If you're doing it purely as an investment, be prepared for the numbers to not really work out the way you hoped. But if you're buying a home to live in and to raise a family and to build a life in, and you understand the financial trade-offs, then it can be one of the best decisions you'll ever make. I may be a tiny bit poorer on a spreadsheet, but I've never felt richer in my life. Now, I want to hear from you. Have you run the numbers on your own home versus renting? What did you find? Are you team buy or team rent? Drop your thoughts and experiences in the comments below. I read every single one. Thanks for watching, and I'll see you in the next one.